The retail investor understands that. The crypto stocks are stocks to rent. Until we get longer term secular drivers for Bitcoin, which we believe we have seen over the past year, we are going to see this cyclicality of Bitcoin as an asset and Bitcoin mining stocks concurrently.
Buying a stock in a Bitcoin miner that has a large hodl is very similar to, buying Bitcoin and holding Bitcoin. But as Steven said, we are kind of a leveraged play. Normally, our stock will increase, exponentially compared to the price of Bitcoin when a run starts. So a lot of people that have had quite a few years of holding and working with Bitcoin stocks can really see these cycles, and they know that they're better off to hold the stock versus hold the coin itself.
Okay, so welcome everybody to a new episode of Bitcoin Equities Talks. Today I have two guests from DMG Blockchain, Steven, which is the CEO, and Sheldon, which is the CEO. Can you, maybe we start by Steven, present yourself, and then Sheldon, and the company in general and your business model.
Sure. Steven Eliscu, the Chief Operating Officer. I've been with the company since 2017. Sheldon founded it a year prior. The way we met each other was through a prior company we both worked at, and Bitfury, which has been a pioneer in Bitcoin mining and software industry. Sheldon and I want to take that to the next level and be able to really focus on the monetization of Bitcoin transactions and give financial institutions choices as to how they make their transactions. We'll talk more about that later. My background prior to that, I worked 9 years at UBS as an equity research analyst focused on semiconductors, and prior to that, I had various roles in the semiconductor industry. Sheldon?
Thanks, Steve. My name's Sheldon Bennett. I'm the founder and CEO of DMG Blockchain Solutions. As Steve said, we met quite a few years ago in Bitfury. He was working out of San Francisco, and I was working in Canada, up in Vancouver. Bitfury, we built at the time what we know as to be the largest Bitcoin mining operation in the province of Alberta. From there, I left Bitfury and started up DMG. DMG is based in British Columbia, in the west of Canada. We built DMG up over the last few years as a public company. We operate in one large data center in Christina Lake. This is where we've grown over the years. We have also moved our software. We started originally all of our software in San Francisco and moved it up to Vancouver over the years. And currently, we have a two-pronged strategy. One is to increase our crypto mining revenues through hashing, and two is to increase our transactional revenues in Bitcoin through our software systems.
Okay, so when was the company launched?
So it was launched privately in 2016, and it went public in 2018.
Okay, and why did you go through the public market route instead of doing the traditional startup route where you raise a Series A, B, C, D, etc.?
It was really about timing. When we were running privately, Bitcoin was growing in value quite substantially, and it was a real rush back in the 2016-17. To go public as fast as we did was able to garner some new capital, and we used that capital quickly to expand our operations. When we were private, we actually only had 300 S9 crypto miners, which doesn't sound like much nowadays, but back then it was a lot. It was we were a pretty big size back then. But the capital needed to really grow Bitcoin mining operations, as many investors know, is quite large. The returns are great as well, but in order to really grow, a public vehicle is a great way to do it, just because you have access to public markets for capital raising.
So you find it easier to easier to raise money in the capital market rather than in the private venture capital market?
Initially, it's easier. Now, we're more focused on debt. and raising debt, and not so much on raising capital through equity.
I mean,
Okay,
at that
Steven, you were
point,
saying?
the venture capitalists were not necessarily very friendly to crypto mining ventures, but kind of given the heritage in Canada for traditional mining, crypto mining, and just throwing lots of capital to be able to extract value from the resource, that was very much the mindset of Canadian investor. And through the companies that the investment banks that we work with, they were able to successfully bring us public.
Yeah, I think a lot of people are kind of lost in the fact that crypto companies, at least crypto companies in North America, generally were denied banking services as a new technology that wasn't understood. So it's not like, opening up as some type of consulting service or some type of mining or manufacturing service where you could go and get a line of credit and take on debt, and you could find investors quite easily that could understand your model and understand your cash flows. The banking system, in Canada, is still very reluctant to bank crypto miners. It's quite difficult to find a bank that will provide services beyond a basic bank account, and that really hasn't changed over the last 7-8 years.
I find it quite interesting from a adoption perspective, and I suggest, I think that what we see also in the public equity space, you have so much more adoption of this whole technology by retail rather than institutional investors, and therefore being able to raise money as you did in the equity capital market, where to which retail have access, it's like kind of mind-blowing that it's one of the unique technologies where you have like retail adoption that is before and earlier and quicker than institutional adoption, whereas in the tech space usually it's the other way around, where you have like these big movements that we are seeing are reveling today with AI, for example, that started much earlier in the institutional space, and now they are getting exposed to the retail space. How do you explain this kind of uniqueness to Bitcoin and cryptos in general?
Well, I think
I think
for Bitcoin, the killer app has been trading. And you asked about timing before. Being successful in cryptocurrency is all about timing. And so the retail investor understands that. In, from having worked with institutional investors in the past, in terms of my former equity research role, the crypto stocks are stocks to rent. Until we get longer term secular drivers for Bitcoin, which we believe we have seen over the past year, we are going to see this cyclicality of Bitcoin as an asset and Bitcoin mining stocks concurrently. So I think what going forward, there is an opportunity for investors as as Bitcoin has new use cases with ordinals and BRC20 tokens, and which in turn is driving up transaction fees, which is reflecting the fact that there is demand for these new use cases. And so we're hopeful that going forward that Bitcoin stocks are more institutional friendly and not just for retail, and that it could be played across the spectrum, especially now as Bitcoin mining stocks have, in terms of market cap, can appeal to a large number of investors, and overlaying with these secular trends that hopefully reflects in the price of Bitcoin, that we see more steady increases rather than these 4-year cycles associated with the halving.
Okay. Let me pick your brain then on one question I ask most of my hosts actually. What is the difference between holding Bitcoin or holding the share of your company or a Bitcoin mining stock? how should an investor see one versus the other?
Well, we're a levered play on Bitcoin. So in up cycles, traditional Bitcoin miners will appreciate more than the underlying asset, assuming they don't have a whole lot of Bitcoin hodl. Sheldon?
Yeah, I was going to say it's a great question. Some or many people still are reticent to purchase Bitcoin and manage private keys. Some are reticent to purchase Bitcoin and have them on exchanges because exchanges have had, volatility and bankruptcies and all sorts of issues. So, buying a stock in a Bitcoin miner that has a large hodl is very similar to, buying Bitcoin and holding Bitcoin. But as Steven said, we are kind of a leveraged play. Normally, our stock will increase, exponentially compared to the price of Bitcoin when a run starts. So a lot of people that have had quite a few years of holding and working with Bitcoin stocks can really see these cycles, and they know that they're better off to hold the stock versus hold the coin itself.
Yes, but when you mention leverage, I mean, if you think about it, if I go 2 times leverage on Bitcoin, okay, and Bitcoin price drops by 50%, I'm wiped out. Whether if I'm holding your stock, I will lose money, but I will not be wiped out. So is there any alpha holding the Bitcoin mining stock or your company's shares compared to holding Bitcoin?
Well, we believe so. I mean, part of it is
Yeah, but
uh,
why?
our, when we have value per, when you kind of look at value per exahash of the peer group versus ourselves, we feel that we are undervalued. So there is definitely alpha with respect to that. But I think what's more important is, at least with respect to our company, is our software and services, and that being able to enable new revenue streams such that when Bitcoin, when the rally that we hope is more ahead than behind us, that we can have some sustainability even beyond that rally.
Yeah, and when you look at our balance sheet, there's a chunk of it that's assets that are Bitcoin hodl, but there's also hard assets in there. So, if Bitcoin was to crash, it would affect a bit of our balance sheet, but we would still have a lot of assets that are cash generating, that are, we can do something with besides Bitcoin. So, a data center is a data center, whether it's doing Bitcoin or something else. So we can still generate revenue by changing the model within that data center. And, the software services would continue generating revenue. Just the Bitcoin would be devaluated on our balance sheet, and, we would have to deal with that. But the stock fundamentally could still stay quite strong.
Yeah, remember
Um,
last year we as a company we generated cash from operations. So our on our revenue, we generated about $5 million of cash flow.
yeah, that's new to me. What's your so I suppose this cash generation part comes from your software business, right? Not from your mining business.
No, this is from the
No,
mining
it's
business.
actually with mining, yeah.
So
So,
how
and
do you generate cash from mining? You generate bitcoins, you mean, from mining?
when we sell approximately 100% of our Bitcoin
Okay,
over time.
but what about the software business? How is it like a revenue generating pool?
It's small revenue right now. Most of the products we've been developing over the last 2 years, during the last crypto winter. We really start getting into them. And they've just started launching. So, our pool has just started launching where, we're on our pool ourselves. We're bringing on new clients. Um, Around the pool, we have some technologies for ordinals for doing transactions on our pool using clean energy. So all of this is new, and we're just sort of starting to onboard. When ordinals first hit, we did have quite a spike. We've done, I think 3 of the 4 largest ordinals on the Bitcoin blockchain. And so we're quite well known in that area by having our own pool and being able to manipulate the block template. And we see that business growing. We never expected the ordinals business, but it's taking a bit of time to adjust and get our software to work with other companies in the ordinal business. So we see ourselves generating revenue, implementing business to business relationships, and not so much consumer to ourselves. So we've been focusing on that. But we do see this year as a year where we're going to start seeing more substantial revenue in the software. The last 2 years, it's been smaller, I think around 5% or less of our revenue. Our goal is over the next 2 years to bring the revenue of our software to around half the revenue of our Bitcoin mining.
I mean, last a couple of days ago, I heard Michael Saylor, CEO of MicroStrategy, talking about the optionality of Bitcoin miners, because when the transactions on the Bitcoin network with the ordinals, for example, spike, you have a lot of additional revenues. In the past couple of weeks, we have seen some very big spikes that were
Yes.
some days beating the network rewards. Do you agree with this view? Like Bitcoin miners have this optionality that you don't get holding Bitcoin?
No, it's a great. I mean, as a Bitcoin miner, it's great to get these additional transaction fees by what really is congestion on the network. A lot of transactions want to go through in a short period of time, and we think that's important. A lot of people have forgotten, and I think they're starting to be remembered with the next halving coming up, that the design of the Bitcoin network was to drop off the bounty or the additional block reward and only live off transaction fees. And for Bitcoin miners to only live off transaction things, one of two things have to happen. The value of Bitcoin has to go up, or the value of the transactions have to go up, or hopefully both of them, in order for Bitcoin miners to be profitable. And so anything that can be done to increase the value of the transactions, we think is a positive thing. And so ordinals is one of a few things that are happening on the network. There's also talk about BRC 20. There's also talk about smart contracts. So we think the technology will continue to develop, and things that will enhance the Bitcoin blockchain from a miner's point of view. We're quite supportive of.
I mean, the thing is, Sheldon and I have been around a while. We've seen transaction spikes before, going back many years. And we're always somewhat cautious that, okay, is it really going to sustain, or is this just a blip? Unfortunately, we can't control that piece of transaction fees, but what we can control is supporting the ecosystem to be able to inscribe more ordinals and enable these types of use cases. In particular, a gentleman in the technical community, Casey Rodermar, has been instrumental in terms of spearheading these efforts. And we've met with him. We support what he's doing. To us, this is, even if Satoshi was really looking for a replacement for a failed financial system in 2008, 2009, as Sheldon said, the whole idea was ultimately the value of what Bitcoin network provides is to be able to have transaction fees rise enough such that that would replace the block subsidy in importance over time. And we think there's enough new capabilities and use cases of the Bitcoin blockchain coming that the transaction fees will be more substantial. But the thing is, hope is not a strategy. So it's nice that there's this upside. We kind of look at it as, okay, this is great. When we plan our business, we don't plan it based on having transaction fees larger than the block subsidy. And it's going to 3 1/8 Bitcoin starting April of next year. If that is indeed the case, it is nice upside, and certainly from the Bitcoin mining perspective as a group, it's going to outperform if transaction fees really do sustain at these kind of high levels.
Okay, I want to pick your brain, Steven, on since you were an equity on the valuation of Bitcoin miners. I spent a lot of time trying to find ways to. I mean, you can do peer comparison valuation. I know which one is more expensive or less expensive than the other. But how do you value the company? Like, what kind of valuation model would you use to give an absolute value before starting to make comparison analysis?
Well, ultimately, there has to be some type of DCF. But the thing is, how do you forecast
Yeah,
cash flows
exactly.
out even 6 months, let alone 5 years? So that is a challenge. I mean, we think in terms of just revenue multiples because the cyclicality is such that it makes it very hard to figure out when there are going to be periods of sustained positive cash flow generation. So the kind of multiples we think longer term on revenue are probably 2 to 2.5 times, and we say this in other public forums as our opinion. We for
Two
us
and a
why,
half times what? Sorry,
revenue
revenue.
on
Okay,
revenue,
okay.
and in terms of if you want to say the type of EV, but just uh, for us, why we're excited about our software and services strategy is these are recurring revenue businesses that we think and that have high fall through characteristic of other software businesses where you would assign a multiple of let's say 10 times. So for us, this is how we think and why we're excited about the software stack that we're building. And unfortunately, because it's an ecosystem, we need lots of pieces to get enough critical mass for enablement. But when Sheldon is talking about the revenue of our software and services becoming a substantial portion of our overall revenue, that's we look to that as that's ultimately what's going to drive the valuation of our company. But when we think of Bitcoin mining, I mean, I've been around a lot of businesses, and it's kind of a commodity. I mean, beyond talking about the amount of hash rate and the fleet efficiency and cost of energy, there aren't a lot of metrics to be able to do a type of valuation. And with software and services, it's much more complex. And we think there are just multiple revenue streams embedded within that that ultimately will get investors a lot more excited and thinking about, okay, well, it's not just what's your cost of energy, what's your fleet efficiency, and what's your hash rate. It's what kind of fees are you getting for this class of transactions. And that's a much more, for us, a much more interesting conversation. We think much higher valuation multiples.
Okay, so since you're mentioning cost of energy and all these parameters, let's dig into them. What made you start in Canada, and what kind of deals do you have there? What kind of energy sources do you have there? Can you walk us a little bit through your metrics, I would say?
Yeah, I mean, I guess one thing is I'm Canadian, so it's always easy to start in your backyard. But there were a couple of other reasons why Canada versus, the US or other countries. As Steven and I had said, we started both in Bitfury. Bitfury had looked at many different countries, had operations in different countries. Um, Back when we were looking at this as DMG, we had a few lessons learned from Bitfury. One of them was about the uncertainty in the U.S., and so you had both state and federal organizations that really hadn't taken a stance on Bitcoin, and you didn't know which way it was going to go. You didn't know if it would be positive or negative. You weren't sure how taxation would work. You weren't too sure what legislation they would bring in as the industry grew. Whereas in Canada, it's a much smaller country. There are less people and government wise that would be, looking to do something around Bitcoin. And the discussions we had were easier to get to government officials and find out what their feelings were and kind of where they would land on any future legislation in crypto. And so in Canada, just sort of from a tax and legislation and compliance, we found it easier to understand, and a little less risky than in the U.S., where we couldn't quite understand it as well. What would happen in the political system there that would one day have an impact, as we all are aware, on the operational side of any kind of crypto mining operation. So, and we've seen that play out over the last few years. So there's been positives and negatives in the U.S. and Canada over time, but I think we had less issues in Canada than we would have had in the U.S. So that was one that was one of the issues we went into Canada. Two is just the climate. I mean, pretty much anywhere in Canada is cold, which is great for data centers. And then three is the cost. The Canadian dollar is weaker than the U.S., which is actually to our benefit since we denominate our operations in U.S. dollars for Bitcoin. So that's been very helpful to us. And then there's just the infrastructure. There's a lot of power available in Canada. Canada is a net exporter of power, obviously to the U.S. A lot of green power being generated, which is great as well. Not everywhere, but in our province of British Columbia, it's abundant with hydroelectricity. And so, when we went to set up our operation and started looking around, we just looked for a large area, access to high voltage power lines, multiple ones actually. Strong supply chain. We're actually about 500 meters from the U.S. border. A workforce that's sort of battle hardened. We went into an industrial area, and everything kind of lined up. And because we are sort of outside of Vancouver, we're up in Christina Lake. The cost of land and building was quite low, so we had a very appealing cost structure, lots of power, clean energy power, and an educated workforce and infrastructure. So it was kind of those are the things we were looking for, and we found that all in BC. You could say there are other places in Canada that are better and other places in the US, but at the time we were looking, this was the best we could find. We kind of picked an area that we understood and had good government relations with, and understood taxation, understood infrastructure.
So when you went to see the government officials there, and perhaps you can walk me through your Bitcoin background or your Bitcoin adoption story. How did you pitch them the idea? Because you
So
had on one hand the mainstream media and the Warren Buffetts saying that it is rat poison squared. So how can you convince? And there's still the resistance today on mainstream media and from very respectable institutional investors. Last week there were 11 Bitcoin ETFs issued in the US, but Vanguard isn't proposing any one of those. So how do you convince back then, which was almost
back then it was a
unknown?
different time, right? We weren't dealing with ESG back then. Nobody was talking about the energy consumption of Bitcoin because it was a much smaller footprint. What was on most government officials' minds was actually Silk Road. So we'd come out of Silk Road, where Bitcoin was seen as an instrument in illegal purchases through the internet. And so we were really dealing with the stigmatism that Bitcoin is only used for bad things and it has no utility for good things. So when we would meet with the Minister of Finance in BC, or we'd meet with, we worked with Strategic Investments in BC, which is a department in the government that goes across all the different departments when investments come into the province. And they bring together all the different ministers and government officials sort of all together in one spot, so you can talk to them all at once instead of trying to find individual departments within the government. And so we worked with Strategic Investments, and we did some presentations, some proposals, explained what we did. One of the key things that differentiated DMG when it came to crypto and this sort of taint of criminality around crypto was the fact that we owned a company called Blockseer. and Blockseer is a company bought when it went public, and it was focused in on its Explorer called Blockseer Explorer, which tracked and traced Bitcoin transactions. What's unique about it is it's one of the first. I think Blockseer was up and running before Chainalysis was even a company, and it was mainly used by law enforcement. And that credential really helped a lot when we showed the ministry that, yes, we're a Bitcoin miner and, we mine transactions on the Bitcoin blockchain, but we also work with law enforcement and we track and trace through our product, nefarious characters and people and transactions. And so there's the side of compliance and regulatory compliance that we had that was a bit unique. And we still have that. And when we get into our pool discussion, we'll explain a lot more about what we do. And that was sort of a key thing where they're like, oh, okay, so, criminals can be caught. There is ways to do this. It's just the tools aren't that well known. And that really helped in our discussions. The other side of it, besides, the software that we were showing them, was that when you looked at Bitcoin, most people look at it from Bitcoin and its utility to them. Do I need to use Bitcoin to put gas in my car? Do I need to put Bitcoin into my bank account or my RSP or whatever kind of savings account? And the answer back then was no. I mean, nobody really needed it. But when you looked at other parts of the world, when you went to South America and you went to parts of India and Malaysia, where you had this huge population of unbankable, and when we started telling them that the infrastructure that we build and operate here in Canada allows unbankable people in South America to be able to hold and transact Bitcoin, so that if the closest bank is 3 or 4 hours away, and they can't get a bank account or a merchant account to buy and sell goods in wherever they live, this is a tool that helps the unbankable be banked. And that story actually resonated a lot with the government, because a lot of the Canadian government's foreign assistance is around unbankable and bringing services to communities that are underserviced. So, between the fact that there's a whole world that actually uses this transactionally day to day to operate that, is not really North American, and that we're providing that infrastructure that helps them, they like that story a lot. And add in the fact that we had over 7,000 accounts of law enforcement using Blockseer. And so our technology was assisting them in their work, tracking and tracing Bitcoin transactions they were interested in. We didn't really find a lot of resistance to our company operating in our province. So it actually went quite well. I wouldn't say that happened for all Bitcoin companies. A lot of them, especially ones that were brand new, ran into all sorts of problems that I don't want to get into, but we have lots of stories of that as well.
But
I say that.
I had met with a lot of mayors and government officials the first few years, really trying to explain to them, why this is something that they want to, I wouldn't say encourage, but I would say not be against. So I think if I could get them ambivalent to our operations, I would be happy.
This kind of experience is quite unique, actually, because you came in with a tool to fight criminal activity, because technically when you're tracking all the transactions and giving law enforcement these tools, you're giving them tools to track criminal activities. And what do you think it would take? I mean, when the 11 Bitcoin ETFs in the US were approved by the SEC, I was really shocked how Gary Gensler went on TV saying that Bitcoin is not approved, the ETF is approved, but Bitcoin is not. And it is a speculative asset that is used for criminal activities and money laundering. What do you think it would take for him to come up with a new speech where he would be saying Bitcoin is a great tool to fight criminal activities and money laundering?
I mean, he's a regulator.
Yeah.
He's not gonna. To us, that's like he just said what he kind of had to say to placate let's just say, his fan club, whoever it's whoever that may be. And from our point of view, the fact that he's acknowledging that Bitcoin is a speculative instrument is consistent with how it has been historically. I mean, we acknowledge that Bitcoin has gone through these 4-year cycles where you have peaks and then you have 80% drops. It is our hope that the ETF also provides some more underlying investment structure by a much broader group of people that helps reduce that volatility, but also these new use cases. I mean, let's face it, Warren Buffett and these other folks, they look at businesses that generate cash, that consistently generate cash. Bitcoin as an asset doesn't generate cash. It doesn't necessarily generate anything. But the network which confers the value to the token is the most immutable public ledger that's ever been created in the history of humanity. And this in turn is what has made ordinals and the whole idea that you can inscribe a digital artifact on the Bitcoin blockchain and it will be there forever. It'll be there beyond our lifetimes. And that is what is driving the value. And we don't expect Gary Gensler or Warren Buffett to ever understand that. So that's that's beyond the point. For us, the key thing is really having these new secular drivers for Bitcoin drive the value, but drive it in a more sustainable way. And where we're not going to necessarily forecast it, because Sheldon and I have learned we don't forecast the price of Bitcoin, but can it be a high-performing asset that outperforms other assets over an extended period of time without the kind of downsides that we've seen on a cyclical basis? We certainly hope so, and we're encouraged. So that's what we would really look towards. And we would just advise investors, yeah, it's a more speculative instrument, and the allocation of your portfolio that you have for speculative instruments, a Bitcoin or now a Bitcoin ETF should be part of that. That's what we would say. It's just where you would allocate more speculative instruments. You should certainly hold Bitcoin. But this isn't necessarily gold. It is a store of value, but it's certainly not gold in the way gold has been as an asset. And it's not necessarily like other assets. So trying to compare isn't necessarily valuable either. For us, it's just Bitcoin historically has outperformed. Going forward, Bitcoin has secular drivers. We're bullish on Bitcoin. We believe investors should have a holding of these ETFs.
Okay, great. I hope also they will be holding your company's shares as well as Bitcoin. Thanks a lot for your time, guys, and it was a pleasure having you on the show. And I look forward to having you back once you have like any news announcement or wherever you want to come public with something. I'm happy to host you back on this show.
Well, thank you for having us.
Thank you, Jared.
Take care.
All right. Bye now.